Hello and welcome to week number 9 of 52 Weeks of Financial Success. We thank you for continuing to follow us. And if you have not subscribed to this channel, please do so you will be notified automatically when we have updated our videos. So let us move on. Week number 9, we're talking about risk management. So far we've talked about setting up a budget, we've talked about emergency savings, we've talked about eliminating debt. Now we want to move to protecting your financial plan. Because I don't care how much money you save, I don't care if you're debt-free, we always need to provide some type of protection in the event that life happens. Well, there are 4 risk management tools that you need. First of all, you need life insurance. Now, many times people say, well, Winfrey, how much do I need? Well, here's the rule of thumb. You need 10 times your income. So if you earn $25,000 a year, you need $250,000 of insurance. Now, the next question I always get is what kind? Well, when you think about $250,000 or you think about $500,000 or if you even think about $1 million, that is going to require a lot of your resources if you try to use a whole life policy. That's why we recommend using term insurance. So you want to have 10 times your income in term insurance. Now, the strategy that I want you to use is try to get the maximum you can through your employer's group plan. Because if you get the maximum through your group plan, it's a lot cheaper. So let's say your company will offer you $100,000 maximum. Well, get $100,000 through your group plan and then get $150,000 with an outside policy. A term insurance policy that you can get from any company. You want to check the rates, you want to compare. But in my $250,000 example, get $100,000 from your employer, $150,000 in your own separate policy. And the purpose for the separate policy is because if you lose your job, you will still have that $150,000 policy. Because many times when you leave an employer, let's say your position is eliminated, the group insurance then goes to a personal policy and it's a lot more expensive. So start with group first, try to get the maximum you can get there, and then have an outside policy. Always have some outside insurance policy that you'll be able to always keep no matter where you're working, no matter if your employer offers insurance or not. Now, the second tool that you need is disability insurance. Many times I see this is where most people have not planned for risk management. Think about it right now. If it's hard or difficult for you to make it and you have a paycheck coming in, how do you think it would be if you were unable to have a paycheck so you're not earning a pay, but you still have your bills that continue to accrue? That's why having short-term and long-term disability is a must. Do you know that you are 8 times more likely to have a disability than you are to have a fire at your home, a car accident, or even death? So disability, it is probably the most common form of risk management that people can have or will need, but they don't have it protected. So with your group plan during open enrollment, or if you can even call right now, get short-term and long-term disability. Some companies only offer long-term. Okay, well, take that. Some only offer short-term. Well, get the short-term, but then find a long-term disability plan outside of your employer. Now, because there are so many people who are watching who are of different ages, I have to bring up the third tool, which is long-term care insurance. Because as we get older, our disability need decreases, but our long-term care need increases. And so really the sweet spot is around 50 years old that you need to start looking at long-term care. The reason why long-term care insurance is so important is because the cost of long-term care is skyrocketing. It is escalating every year, where it was averaging about 5%, now it's growing at about 8 to 10. So it's important that if you're listening and you have some parents, your parents are still living, and you're concerned about do they have long-term care insurance, you need to talk to them about this. Because this is very important. Because we're in a day and age now where many children and grandchildren cannot afford to take care of their parents as they get older. So they need a plan where even if it's home health care, even if it's an assisted living facility, and worst case, nursing home, you have the funds to be able to provide for it. So look at long-term care. Once you get 50 and older, so even if you're not of that age, ask your parents, hey, have you planned for long-term care? If not, let us start looking at that for you. And then the last tool that you need is health insurance. We cannot talk about this enough. The importance of having health insurance as we think about the success of our financial plan, because watch this, you can plan, you can do everything you're supposed to do, but if you have one healthcare need that requires maybe surgery, that requires something that will be major, that you were not planning for or were not expecting, that could totally derail everything that you planned for financially. So we encourage you, get health insurance. Now, you may say, well, Winfrey, I'm at the point where I can't afford it. Well, that's why you need to go back to the other steps. We're working on the budget, getting your savings in place, eliminating the debt where you can fit it into your plan. You have to have it, especially if you're a parent. If you have children, it's imperative that you have that protection in place. So we need life insurance, we need disability insurance, we need to start planning and talking about long-term care, and then most important is you need health insurance. So this is what I want you to do for your homework this week. I want you to go ahead now and see what areas of life insurance, disability, long-term care, or health insurance you do not have covered. And you need to call your employer to find out what would it cost you to add all 4, 1, 2, the areas you do not have. And you need to start planning. Because most people have open enrollment in October. So here we are in March, and so you say, okay, I can't afford it now, but I need to start working towards that by the end of the year. You need to know what it will cost you so you can work on a plan right now. Because I do not want anything to happen where you do not have your financial plan protected. All right, so as we prepare to close, if you have not downloaded our free chapter of our book, please go to our website now, charleswinfrey.com. Put in your name, email address, you'll be able to download your free chapter, and then go back and review our previous videos. If you are still wondering, am I on pace? I've just found out about this, catch up. So then we can start moving toward week number 10 as we start looking at retirement planning. Well, thank you again for tuning in, and we'll see you again this time next week for 52 Weeks of Financial Success. Thanks.